Hello, everybody, and welcome back to another Market Talk. Today, like always, my business partner, Jeffrey Callowfoot, is joining us. Hello, Jeff.
Good morning.
And we have Giovanni Cortese from Scudo Agency, insurance agency. Thank you for joining us today, Giovanni.
Good morning, Jay.
So, Giovanni, wanted to talk to you about obviously homeowners insurance and everything that kind of encompasses because it can be a lot and a little bit overwhelming for people to completely understand the process. And the goal for our call today is to bridge the gap. So, understanding homeowners insurance or any different types of insurance before getting into a real estate transaction and try to bridge that gap of understanding the process and what that would look like. So, Giovanni, can you give us, how long you've been in the industry and how'd you get in and, where you're at now?
Sure. So I've been coming up on 10 years. I've been doing insurance for the last 9 years. I'm a certified insurance counselor. It's a designation I carry that I renew every few years. And basically um, it focuses on the underwriting and the processes that go into a policy. So
Mhm.
I know a lot about the policy as a base form through that certification, and I try to pass that value on to my clients. I started with a friend out of college, actually. He had an agency, an independent agency. So I worked at a few independent agencies and last year started my agency, just to give myself a fresh start and refocus and realign with my clients so that I have my clients as the most important objective rather than trying to satisfy carriers and clients simultaneously. I've
Mhm.
kind of shifted gears to become 100% client focused. Um,
Amazing.
and that's
Love it.
why I started Scudo Agency, to kind of put myself in a position to help people through the insurance process. Because when I started, it was frustrating. It
Mhm.
didn't make sense. Why would you pay money and not get money back? It seems like it can be worthless in a lot of ways when you first look at it.
Mhm.
But as I've been in insurance over the years, you learn the value, you learn when it comes into play, and it may never actually kick in, but when it does, it's really important.
Right.
So, so
You
that
never want,
transition.
yeah, you never want it to kick in because usually,
No, you never
No,
want to use
no, you don't. You really
it.
don't at
yeah,
the end of the day. But when it does, you hope that you have all the coverages you need and you're not paying anything out of pocket,
right.
right? That's the whole goal. And
So,
I helped a lot of homeowners, find insurance for new purchases or currently insured houses, flood insurance, and everything that you may need to protect yourself. And I
mhm.
try to guide people through the process simply just to explain what's on the line, what they can get, what they should get, and then they make the decision from there, typically.
Right.
Great.
So the designation, you have a CIC, correct?
Correct. Yes.
So that designation, can you explain? I know you did a little bit right there, but can you explain how that differs from just a standard insurance agent who doesn't have that certification?
Sure. So everyone that sells insurance needs to be licensed in the state they're selling insurance, through the agency or as an individual. Um, and furthermore, the CIC is a designation that just qualifies an agent carrying that designation, saying that they've done the 5-year course,
Mhm.
completed the different sections, to give yourself a little bit more of proficiency, I would say. So it's more of a professional development, but
Okay.
it's well recognized in the industry as a qualification to become a consultant, and really help your buyers through the entire process, soup to nuts, rather than just doing one portion of the sale,
Right.
whether that's underwriting or doing an application, or actually selling the policy. So it just gives you more qualification, but it's not a different license. Everyone that has the basic license can sell insurance. The CIC is just a further qualification.
Yeah, right. So you've taken it a step further, so you can actually, like you said, counsel the public or home buyers or sellers on the process in regards to breaking down the different criteria and what it actually covers. Because the language of homeowners insurance can change in regards to what does that actually mean? What is actually covered in there? And then like there's certain scenarios where like we were talking earlier, like if the rain comes in on the roof, if the roof is damaged, that's, something else, then it can get tricky. So it's
Sure.
actually understanding what the actual terms mean. So, and you personally helped me out with that. That was great. Um, uh, can you kind of explain in the last year or so, insurance have kind of skyrocketed. The warning of percentages that it was going to climb, and I think that scared some people for sure. Can you explain that whole scenario? What changes have happened recently?
Definitely, definitely. And I think it's important to look at the origins. So you look at reinsurance, and that's a market that kind of drives the products that we have, right? So the reinsurance market gives funding to the carriers that we know, like the Travelers, Geico's of the world, Farmers Insurance, direct or indirect or agent appointed. So what happens is uh, the carriers perform on those funding,
Mhm.
and if they do well, then they are granted the same or more reinsurance, and it's easier to write policies. If they have a lot of losses and they don't make up the rates with premiums, well, then they get less reinsurance.
Mm.
So what that does is like a trickle down effect. So now, since the reinsurance isn't providing as much general funding, we see a shrinking marketplace as consumers. So we have less options, right? The guidelines are tightening, the products are tightening, so there's less availability.
Mm.
So when you say the price skyrockets, definitely, and there's kind of two factors that play into it. One is the fact that it's not the eligibility is so hard to place a new piece of insurance, and on top of that, the rates are going up. And something important to note is during COVID, they didn't really increase the rates. So once we came out of COVID, they were allowed to file for rate increases, and some of them filed for up to 60%. Now the
Jeez.
state hasn't approved, right? It's scary to think about. The state hasn't approved those
Crazy.
numbers. They'll probably come down to a much lower number, but they're required to advise all insureds when they go anything above, 16% typically. So you
Mm.
might get a letter in the mail. It looks a little scary. Your
Yeah, yeah,
rate's
yeah.
going up like 16%, right? And
Yeah.
that's because they've not been locked out for 2 years.
Mm.
They're going kind of overboard. And I think hopefully that'll start to correct years to come. But it's just, I think COVID really, mixed with claims,
Yeah.
um, is the reason
Giovanni,
that,
when we get those letters, right, is that a good time to start shopping around again to see what you can do as far as, your price, or is that something that's going to be kind of standard across the board?
yeah, that's a great question. Honestly, right now I'm telling my clients that it's not the best time to be shopping. Just because like I just talked about, the eligibility is so low. It's you can do it. Don't get me wrong. You can
Right.
always shop. But the best case scenario is just keeping your current insurance going. So no lapsing, no cancellations, because once you get into the realm of not having insurance or pending losing your insurance,
Right.
you're in a really tough situation. And that's what I've been trying to help my clients navigate through. And we're talking about being proactive. That's what really you need to do. Proactively, you got to make sure
Right.
that your insurance is staying on course, and kind of expect that the premium increase is coming. Not to say, like I said, you can shop, but it's not something you should rely on,
Mm.
Right.
if that makes sense.
Right. So say a policy lapses and you're kind of in a limbo period and this thing jumps, like you're potentially kind of putting yourself in a bad position because then you're at the mercy of all the rates that have jumped. So you're saying if you're locked in, it's a little bit better for you, scenario wise, to make.
Exactly. If
Okay.
if you have a home, it's good in this market. You can expect a little bit of an increase, but ideally you don't want to be left in limbo because, like you said, you're going to be staring at potentially double, triple the premiums, and the coverage may or may not be as good. Um, so that's what we're looking to avoid.
What are
Great.
the Giovanni, like, when you're comparing policies with people and stuff too, like what are like the meat and potatoes of the policy that you guys really focus on?
For a home, it's really just the condition of the home, I would say, and some
Right,
factors are out of your control, but
right,
some aren't. So, like for instance, a year built, right? Like that's a big one. Like if it's built in the 1800s, it's a limited scope of carriers that want to write that.
right,
If it has a flat roof, if it has a swimming pool with a slide, right? Unique risks have a
right.
really tight window. A general risk has pretty, it still has a healthy market choice, but it's all about the condition of it. And if
Okay,
people are proactive with the updates, painting, keeping the utilities up to speed, keeping everything level, safe, filling in holes and gaps, things like that. And you're proactive with that, when you go to market your insurance, you have a leg up. You'll get more options than the common person that may not be doing those things.
okay,
Mhm.
And in this market, you need that. So if you are going to shop, it's really about being proactive with making sure the condition of your asset looks good to the eye test and has something on paper that points to you taking care of it recently. And I think that has opened the door for my clients to get more than market options. So instead of just one quote, you get three, or
right,
three, you get five. And that's a big
right.
difference in this marketplace. So
Like going back to something you just touched on too. I mean, living in the area that we all are, we do have those homes that are built 1800s, early 1900s. There's definitely a struggle with that. Like, what do you recommend to those people that currently own those homes and people that are looking to maybe buy those? They like that old style home.
sure. A lot of it comes down to doing the diligence and research on the budgeting. Working with an independent agent like myself, like that can help as well because
Right,
there are some products you just can't get access to as a consumer. So you can simultaneously go to the direct marketplace and an independent agent.
right,
I think you'll find the independent agent experience easier,
Mhm.
but if you want to do it yourself, that's possible. But when you have a unique risk like an older home or flat roof or like a
right,
row home, things like that, some products are really just tailored to working with agents, and you may not be able to get them yourself. So why
right,
not give it a shot and see if that carrier will take you?
right,
Yeah.
But it's just kind of knowing that insurance may be a little bumpy with an older home and kind of prepping for
right,
a larger delta of changing.
Mhm.
Whereas with a home built in the last 20, 50 years, it's not going to go up and down as much.
right. Are the rates that significantly different between, say, a house built in like the 1990s versus the 1890s?
No,
Okay.
just again, with the market eligibility, yes, it's smaller, but the scope is smaller, but it's all built based on the rebuild cost of the home, I would say is the
Right.
main driver,
Okay.
right? So if you're at 500,000 to replace your house versus 1.5 million, it's a lot different of a price
Sure.
baseline for your dwelling. Sure.
Right.
So, and that's another thing we talk about too with the larger homes is like getting the central station alarms, things like that, right? Being proactive. If you have to shop something over $1 million in rebuild, you need central alarms.
Right.
You're not going to get quotes without it. So if you're someone that has that lapse and that's the rebuild value of your home, you're going to have to get those installed anyway. So why not be proactive and start getting these things and going now in
Mhm.
case something happens,
Right.
and take advantage of discounts while you're at it. So it's
Yeah.
it's you know it's
Right.
helpful in two ways.
Right.
Absolutely.
So when when you're looking at an older home, do they take in account when it was last remodeled or renovated?
Definitely,
Okay.
definitely. If you have records of when it was like remodeled, definitely present those with the agent and talk through that because that could be some carriers' ways of saying that's the year built they'll use.
Hmm.
They'll use like a second year built almost. Some
Okay.
carriers will just go to the original and kick it out.
Yeah.
But it's good to have that on hand always.
Yeah. So it's definitely having someone like you in your, you know, someone like you working behind the scenes to actually navigate and understand all the different options compared to the public going right to one agency. And because I did have some clients that you helped because they went to one agency and their house was built in the late 1800s and they were like, no, we can't help you. And they got in contact with you And they're like, okay, you were like, okay, here are your options. You were able to navigate that a lot better than they were because they didn't know the ins and outs, right?
Right. And
So,
and Jay, just as a courtesy, when people call me, it's a very straightforward and upfront conversation.
mhm,
Hey, I'm having a problem because my home is X and Geico or so and so other agent, direct agent won't write me. Okay, what right away, let's talk about that, and I'll tell you if I could help you, and if not, I can point you in the right direction. But
mhm,
we get to that right away.
yep,
It's unfortunate when that comes at the end or after the policy is issued,
mhm,
and then you have cancellation problems, right? So
Right.
I
Right.
like to just talk to people up front and just tell me what's going on. I'm not the insurance carrier. I'm your agent. I work for you.
Right.
So
right,
you tell me what's going on and we'll figure out where to put you,
mhm,
rather than trying to give less information and then get surprised mid policy or after issuance.
yeah, for sure. What about like flood insurance these days? Can you explain flood insurance and like correct me if I'm wrong, but you don't necessarily need to be by water or be in a flood zone to have flood insurance. Can you elaborate a little bit on that?
Absolutely. So water's a little bit tricky with your homeowner's policy, right? So when a pipe breaks in your house, like that's going to be covered. That's structural. So if, water happens, let's say the wind blows a piece of the roof off and rain goes in your house, like that's going to be covered, right? Because the initial cause of damage is something that's typically covered.
Hmm.
What's not covered, generally speaking, is when water from the outside comes into your house. And that could be something random. It could be a really, really bad rainstorm like Ida. It could be your neighbor's above ground pool floods. It could be someone leaves the hose on. Who knows, right? Water pooling from the outside penetrates and breaks into your house. And let's say it floods your basement or damages your contents. Without flood insurance, it's not covered.
Mm,
And people think that it might be covered under homeowners insurance, but it's not. It's explicitly excluded. Um, and
Wow.
you don't need to be in a flood zone for something that to happen. So
right.
what I do recommend is to my clients is getting even just a little bit of contents and building coverage, so you're not out of pocket. It's really broadening your coverage as a homeowner, right?
Hmm.
Even let's say if you get 25,000 or 50,000 for your contents in the building, at least you have something to rely
Hmm.
on. Otherwise, it's either out of pocket or maybe you're grabbing a ticket to get in line for natural disaster funding, which who knows how long that could take. But for sure, the homeowners carrier is not going to be looking to pay that for you,
Right.
right? So that's what I like to tell my clients. And then if you're in a zone that's not a flood zone in a 100-year map,
Hmm.
your flood insurance is typically at a lesser rate, at a preferred rate,
Right.
right? So.
Giovanni, what are other common misconceptions and things that people, the homeowner, generally misses that you're seeing?
Sure. Yeah, yeah. This is a really important point. So an active policy does not mean coverage. And like that's something that people can't understand sometimes. But what I see a lot of and what I try to coach people through is and advise people through is the occupancy of the house needs to match the policy at the time of a claim or within a small grace period for policy to be triggered, right? So if I buy a home as a individual, but then I rent it out, but then I
Right.
don't change the insurance, right?
Right.
And then I own it. My HO3, it's primary, but I have a tenant living in there. I'm living somewhere else, and that house burns down. There is a strong chance that they may not pay that claim because it's tenant occupied, and
Mm.
I have represented that it's owner occupied.
Mm,
Right.
So just because I have an active policy, my bank has cleared it, I pay it, it's good. It may not do anything, right? So I try to help people when they're buying a house, especially in this market. I'm renovating. Okay. Like, what are you
Right.
doing in the renovation, right? It's not going to be covered. Like they're going to go to the house and see that you're renovating the home and you had a loss, but you're saying it's owner occupied from closing, and all of a sudden you don't have coverage. So let's talk through the options. Let's budget out a builder's risk policy. Let's
mm,
budget out tenant to homeowner, homeowner to tenant policies. Let's talk about that stuff right
Right.
up front. Let's create a roadmap so the
Yeah.
insurance follows the occupancy so that you're always covered, right? People roll the dice a lot. So that's something I try to, help people through as well.
Yeah. I think people, correct me if I'm wrong, but the goal for the insurance company is to try not to have to pay certain policies, you know? So, I think like you said, it's like, okay, tell me exactly, like you want the client to be like, okay, tell me exactly everything you have going on and what you're thinking
Exactly.
about doing. So then I
Yep.
can put the pieces together and make this make sense because
100%.
yeah, I want to make sure that, like you said, that timeline, you're covered through that whole, and there's no loopholes to where the insurance company can get out of
And
actually
wiggle out
and wiggle out of helping you.
and take and collect premiums and just be like, oh, you know what? This isn't what we agreed to,
Yeah.
Right.
and we're not
And
paying.
you're
And
just
that's
shelling
not
out
where you
money.
don't want to end up there, So
Yeah.
let's talk about it. Let's budget it out.
Yeah. So, what are some of like, what do you always recommend on, policy? Like, what does a general homeowner's policy look like? Do you also rope in auto? Do you trying to do like a whole like umbrella? Can you explain like how that all works as well?
Definitely. Yeah. So I try to do I do personal lines, all across the board. So that involves any personal assets, whether it's your camper, your motorcycle, flood insurance, home insurance, umbrella, and
Will you
basically
cover my
what
deer
that
mounts on my basement wall?
Dear man.
100%. So that's also that's also important, right? That's also important. Like people like
Not
sublimits,
cheap.
right? Like exactly sublimits. So if it's a specialty valued item, in some cases, the insurance is only going to pay a sublimit per piece for theft
Right.
because they're, just to combat, industry fraud is what the understanding is with that.
Right.
But basically, if you look at a policy, you'll see like jewelry, 2,000, 3,000 a piece, maybe 1,500 a piece. So
Right.
if you have your engagement rings, your watches that are above that value, they get stolen, you're going to put a claim in and you're getting a
Nothing.
small portion of the
Right.
value that you thought you'd get. Another thing to look out for is scheduling things like that, like specialty, anything that has a value
What
on a
about
standalone basis.
collectible?
Collectibles as well. Yeah. Firearms, artwork, tapestries, rugs, things like that.
Hmm. Oh, Jeff froze.
I have a sports card collection. How
Oh,
do I add that onto the policy?
Right. So that's going to be a separate auto policy, for collector car, and depending on what the operations of those are. But you want to make sure that you're getting coverage siloed for each asset that you have, unless it can be combined. But typically,
Right.
if you have a collection like that, it's going to be scheduled on a different policy.
Right.
yeah. He
Yeah.
said card,
Yeah,
like
sports
Oh,
cards.
card. I think you said cars. I'm
yeah.
sorry.
I wish I had a
Sport card,
card
yes.
collection.
Stamps, sport card, yeah, things like that. Sorry, I misheard you.
That's
But
okay.
yeah, things, collectibles, coins, like anything that has that value like that. You want to look at your insurance and check the sublimits and see if it fits into what you budget. I mean, if it's at or near the sublimit, then really
Yeah.
no issue there, right? But if
Yeah.
it's way above, well, let's talk about scheduling that in your policy. You may have to pay extra premium, but you're going to get that full value back, or that
Right.
piece, or those stamps, or those cards, whatever they
Yeah.
can give you to replace it.
Right.
Yeah. Jeff has an extensive Beanie Baby collection.
We're hoping they strike for value, right? Have you seen those? They make those really funny memes with like what the world would look like
Yeah.
if they're actually were at their value. It's like incredible utopian future.
That was an incredible time. I
We're
never I
holding
never
on. We're holding on.
yeah, hold on. I never figured that one out. I was like, all right, cool. Um, so
Hope
yeah,
not.
On
You,
that, Giovanni, I got to ask you, what's the craziest thing you've seen people insure?
oh, nothing really too crazy. I mean, honestly, it's pretty straightforward. So I don't mean to be too boring, but nothing too crazy. I mean, artwork, yes, rings, and nothing, watches, nothing
Right.
that jumps out though.
mm.
Really, that's crazy. Yeah.
No,
Have you
no Furbies or anything like
no
that.
Furbies.
No Furbies, no. I haven't run into that yet.
I'll call you
Wine
later about that.
collections, I mean, yeah, but
Yeah,
what? Yeah.
Jay's gonna call you.
I'm gonna call you. That was my Furbies. Um, have you heard like any horror stories of people just not being covered on certain things and stuff like that. Have you seen anything like that recently?
Yeah, I have recently. I worked with an insured recently that the prior policy had that exact issue with the occupancy.
Uh,
He had a tenant in one of the properties. He was there for a year, but then meant to switch it, forgot. A tree branch fell on the garage, and they were like, "Well, the home is tenant occupied, so we're not gonna pay for the repairs, almost $12,000." So,
oof.
um, it's not horror per se, but that happens, and it's unfortunate, and it would have been a lot worse if had the damage been a lot higher, right?
Yeah.
Um, so not really horror like that. And luckily, like I try to really give my insurance a leg up. So luckily, my clients, I don't have a lot of horror stories.
Right.
I have the opposite where an adjuster will go out and say, "Oh, you probably don't have coverage for this." And
Mm,
then my client calls me and then they're like, "Oh, what? Well, we have coverage." And the adjuster's like, "Wow, not a lot of people have coverage for that."
mm,
I'm hearing that more because I'm pushing broadness, like
right.
I want your policy to respond. So how do we do that? Not just by raising limits, by giving you more coverage option.
Mm.
Sorry,
For,
excuse me.
for all different
Um,
kinds of for all different kinds of scenarios that the public necessarily wouldn't see, but you can see because you're obviously on the inside and being like, hey, I would have this if I were you, kind of situation.
sure. Yeah, and it's just if you got home and there was a mess and you had to pay for it,
Mm,
you want your insurance, you want a high percentage chance that your insurance will do something, right?
yeah.
That's what I'm trying to help you do. So I'm giving you the broadest option. Some people for budgeting or just their own self-insurance will limit it down, but they're starting with the broadest option, broadest coverage. So that if something goes wrong, there's just a good chance they can come to the insurance policy, to recover from a financial loss, which is what we're trying to do, right?
Yeah. And
So
thinking about the rental situation that you just described, I mean, that could be really detrimental to, the landlord, right? 12 grand out of pocket. How, unless his margins are really great on the rental each month, for him to recover or recoup that, he might just have to still rent that out for 2 years and still breaking even or below on any kind of rental income. So that could change the course of like, all right, maybe we just got to sell this property now because to try to recoup that 12 grand of income, that's going to take a while.
absolutely. Absolutely. And it's something that if you're doing that type of work and you're in the business of, leasing properties, it's definitely good to talk with a licensed agent. And something else I try to do is just help people with understanding, transferring risk, in the contracts. Another way to protect yourself, right? So we talked about the physical protecting the house. How about protecting the actual liability, the other portion of the policy, if you're getting
Mm,
sued, right? So have your tenants get insurance, right?
yeah.
First, you get the policy that's your landlord, so it matches the occupancy. Then have your tenants acquire insurance, name you as an additional insured. What does that do? It protects everyone in the right way because if the tenant is at fault for something, they have a policy to cover themselves. And it's not falling on you as the landlord, even though you had nothing to do with it, except that you own the home. Now,
Mm,
if it's your fault, that's different, but you want to put the layers in place to protect yourself. Um, and the tenant should have it too. Even as a tenant, if you're a tenant, you should have a policy for your own stuff. Your landlord's policy does not cover your stuff
right.
mm,
unless he's paying for furnishings, you know?
right. Right. Um,
So it's, yeah. Sorry, go ahead.
no, no. Do you do rental insurance as well?
Yeah, I do.
Okay. Incorporate it all. Um, what is one thing, one tip, or one aspect of the insurance industry that you obviously being on the inside know that you would like the public to know about insurance? Is there anything that you could speak to?
Hmm, good question. So I think overall the underlying advice I would give is just be proactive in general with your insurance, your documentation, your preparation, your TLC, the way that you care for the asset, the property, your procedures. Make sure it's all buttoned up. The more it's buttoned up, the easier life is as an insured. That's really the bottom line because there's going to be ebbs and flows in the marketplace.
Mm,
That's out of the control of us as consumers. I have insurance too. I'm not in isolation here. I also pay insurance. So it's really about just being prepared
Mm-hmm.
as an individual and just being responsible and just making sure that you're putting a really good effort into keeping everything organized, um, and ready to go. So
Mm-hmm.
that if when we do hit a bump in the road like we are with this market, you're ahead of the curve,
Mm-hmm.
you're ready to go. You're not going to feel these huge spikes. You're not going to be looking at 2 or 3 times premium increases. You're going to be a lot smoother sailing
Mm-hmm.
because you're ready. So that's what, and that goes across the board because I also do business insurance. So it goes across the board as homeowner, business owner, car owner, whatever it may be,
Mm-hmm.
landowner. Just being responsible in that sense, it really, really puts you at a huge advantage to keep your insurance within a tighter margin of premium
Right.
across the years of the asset. So if you own a home for 30 years, you just want to make sure it's kind of relatively flat, not a
Mm-hmm.
lot of spikes. And you
Yeah.
do that by being proactive.
Gotcha. How often should uh homeowner reach out to you to evaluate their current policy?
It really depends on the changes.
Okay.
So if there's a major change, I would say that's definitely a time to review it. Annually is typically what I look for. Um, but if there's any major changes between that, plans to change, you know, I would say that that's the most important time to address a policy. And sometimes the changes are coming from the carrier and sometimes they're coming from the insured. So
Mm-hmm.
whether the carrier's taking away coverage, adding coverage, increasing the price, increasing a rebuild value, those are times where you want to assess, okay, am I at the right spot?
Yep. So someone,
Otherwise, if it's increasing with inflation, the home's going up with inflation, the premiums going up with inflation, I would say that it's not necessarily a reason to shop,
mhm,
especially in this market, but in general. I would say that it follows more significant changes either from you or from the carrier.
gotcha. So maybe, annually someone reaches out to you, like I would reach out to you and go, "Hey, Giovanni, can you look what we got going on now? We still good, or should we, shop around, or is there anything else better out there?" And you'd evaluate the situation and go, "No, you guys good, hang tight," or "Hey, let's jump ship and go in this direction."
100%. Yep. So that's it. So first it's a discussion of how are we, what are we doing, how are we performing, what's
Right.
happening. Obviously people are going to jump right to what's my monthly payment, which is fine. That's understandable. Me too.
Mhm.
But to a degree, you want to understand, is that in line with the marketplace or did something happen? Right.
Right.
And if something happened, that's when we're looking to shop. But if you're in line with the market, whether it's stable, up, down, in a standard market, you're seeing closer to flatter renewals.
Hmm.
In this market, you're seeing 15%.
Hmm.
So if you're at 15%, you didn't do anything. You're still in good care. You're still in good standing. It's
Yeah.
just a bad market blip, right?
Yep.
Whereas if you go up 40% and your dwelling goes up double the value, or your liability went up, or they took away an endorsement, okay, now let's look at this, right?
Mhm.
Let's shop it.
Right.
That's what I would say in this market.
Gotcha. And as another pro to, going with you or talking with you is that you're going to have more options out there than just the public reaching out to different insurance agencies and stuff like that. You're going to be able to see a little bit more behind the scenes and maybe pick up or get some different quotes from some providers that maybe not so, don't advertise or don't have a lizard on TV all the time. So you're going to have more options for people too, right?
Right. So there's the direct market, which they can get to themselves, and then there's independent agents, which can offer them carriers that only work with agents and they
Hmm.
don't work directly with consumer. And the benefit of that is they have niches and they have specific guidelines that cater to homes. And if you fit into their program, you might have a really good rate, really good coverage. So for me, it's really about assessing everything up front. What is the situation? What is the house? What is the business? What does it look like? And then where should we go?
Yep.
Sometimes direct is the only way or the best way. I'm not shy in telling people that,
Right.
but it's always beneficial to work with an independent agent just as your first person.
Yeah.
and check there first, and then direct as kind of a backup, or if it's advised to go that way.
Nice.
Awesome.
That's awesome. Anything else you'd like to share before we end our call?
No, I think this has been really valuable, and just want to get the word out. I don't think it's all doom and gloom. I think that, like I said, as long as you keep everything in good standing, you can weather the storm. And I think that it'll start to shape up once they catch up with claims and rates.
Mhm.
Um, and that's when you want to take advantage of good discounts. And again, another reason to be proactive, right? When you're ahead of the curve, you're going to get those big discounts. So when the market starts to come down a bit, you're going to see a bigger drop than your peers because you're ahead of the curve. So it's always the same underlying message of kind of just being prepared to take advantage of the market or shield yourself from going too high up.
Gotcha.
And
What
Giovanni,
is
if somebody wanted to reach out to you, what's the best way to get you?
Yeah, of course. So I'll share my office and my office phone and my email, but just either way, I work with insureds no matter how they want to work. I'm very flexible, whether it's in-person meeting, a Zoom, a call, email. I cater to my clients. Again, I'm working for my clients. So
Mhm.
Awesome.
whatever they want to do in terms of getting in touch with me, we'll make it work. And I make it flexible so that it's easy for them to continue with what they're doing, and I'll worry about the insurance. If
Nice.
that
Beautiful.
makes sense. Yeah.
Absolutely.
Awesome. We'll put all your contact information below our in the comments and stuff like that in the description, and just so everyone can get in touch with you as well.
Thanks. Okay, cool.
Giovanni, thanks so much. It was really informative. Really appreciate your time and the information you shared. So thank you so
Absolute
much.
pleasure, man. I can't wait to get my Beanie Babies insured now.
Jeff, Jay, I really appreciate your time, and have a great time. Have a great day, and thank you again for having me.
Yeah, we'll
Thank
do it
you,
again.
Giovanni. Take
Thanks,
care,
All
buddy.
buddy.
right, take care.
Bye bye.
Bye.